Hello everyone, hope you're all having a great week. My name is Drew, the host of Never Behind. Now, when we have a market that is unstable and goes up and down dramatically with so many investors worried and concerned about the market in the upcoming year, I personally think it's very helpful to listen to great investors that made it through several market crashes and have been very successful with their investments. Now, when we talk about great investors in the stock market, there are two names that always come up, which are Warren Buffett and his great partner Charlie Munger. Today I want to share the wisdom from Charlie Munger and what he thinks about the market we are in with high inflation and increasing interest rates, and also what he thinks about the future of businesses that are leading the market such as Amazon, Apple, or Google, and finally what he prioritizes when searching for great businesses to invest in. So with that, let's get into the video and hear the wisdoms that Charlie has been sharing to individual investors like us. I also wanted to share that Seeking Alpha is having a great promotion, providing the premium service that was $239 a year all the way down to $189 per year, and I've also shared an interview with the founder of the Seeking Alpha Quant system showing how he uses the Seeking Alpha platform to find the best 10 stocks in specific industries. So if you are interested in the Seeking Alpha platform, please make sure you check the video on how to use the platform to find great companies, and also use the link in the description below in order to get the discount. I've also started a Discord that is 100% free and have great investors regarding stocks, options, swing trading, chart analysis, and even cryptocurrencies sharing their ideas on opportunities for investments every day. So if you are interested in being a part of the community, please click the link Discord in the description below. So first of all, I'm sure that every investor in the market right now is concerned about the inflation that is being maintained at a high level for quite some time now, and is also worried about the Fed fund rate that has been going up dramatically and have the possibility to stay high or even hike a bit more in 2024. Now, Charlie Munger has been through several of these economic situations regarding high inflation and increasing Fed fund rates, so let's hear what he has to say about 2023 and 2024.
What are the ramifications of moving away from a close to zero interest rate policy? So what do you do now that the interest rate environment is changing?
Well, there's no question about the fact that as interest rates have gone up, it's hostile to stock prices. They should go up. We couldn't have kept them forever at zero. And I just think it's just one more damn thing to adapt to in investment life, is that there are headwinds and there are tailwinds. And one of the headwinds is inflation. And I think more inflation over the next 100 years is inevitable, given the nature of politics in a democracy. So I think we'll have more inflation. That's one of the reasons the Daily Journal owns common stocks instead of government bonds.
If you think we might have on and off waves of inflation like we did prior to when Volcker stepped in at the Fed in the 70s era.
Of course it will happen some in the future. Yes, I think we'll have some of that in the future.
Do you think we'll have it immediately, right now, with what Jay Powell's dealing with?
I think I'm pretty good at long-run expectations, but I don't think I'm good at short-term wobbles. I don't have the faintest idea what's going to happen short term.
Well, as usual, Charlie is very straightforward on any interviews he has and shares what he knows, but if he doesn't have the answer, he just says, I don't know, and that's it. So what Charlie is saying here is that it didn't make sense at the first place to have interest rates at zero, and it's very natural that it's hiking up again. He also was saying that cycles of inflation rising and going down are the nature of the investment world, so these hikes of inflation and interest rates will always happen over and over again. But eventually the market will keep going up in the long run, and the issues that we are facing right now, although they sound very serious, will eventually all get settled down. Now, Becky also asked whether he thought that the inflation situation felt similar to what has happened in the 80s, and was wondering if we would see something similar like Volcker did in the 80s, where the Fed fund rates went up to 20%. Now, Charlie's answer was very short but also very clear, saying that he has no idea what will happen in the short run, whether the Fed fund rate will go as high as it did in the 80s or not, but he's confident that the market will find its way and will keep growing over time. And also mentioned that he and Warren mostly focuses on the long run, which would be decades, rather than getting worried about what will happen next month, next year, or in 2 or 3 years. I really think this is how most investors become billionaires, where they focus more on finding great companies that are undervalued and then just keep them whether there is a crash or not, since they know the storm will clear up and eventually the stocks of great companies will keep rising, rather than getting stressed on trying to time the market, thinking that it would be better getting out now and buying back in when the market tanks. Now, this would be a great strategy if the market tanks and goes down as you expect, but both Warren and Charlie even even say that they are not capable of predicting the market, and therefore feel very comfortable finding great companies at undervalued prices and keeping them for several decades, if not forever. Now, the next questions that Becky had were the ones that I think most investors would be interested in hearing, which was what Charlie thought would be the future of the big tech companies leading the market, whether he sees those companies keep growing forever, or whether he thinks even these big companies would not survive in the long term, and also asked what Charlie prioritizes when looking for companies to invest in for several decades. So let's see what Charlie had to say.
The business world is very much like the physical world, where all the animals die in the course of improving all the species so they can live in niches and so forth. All the animals die and eventually all the species die. That's the system. And when I was young, I didn't realize that same system applied to what happens in capitalism to all the businesses. They're all on their way to dying is the answer. Causes some remarkable deaths. Imagine having Kodak die. It was one of the great trademarks of the world. There was nobody that didn't use film. They dominated film. They knew more about the chemistry of film than anybody else on earth. And of course, the whole damn business went to zero. And look at Xerox was once owned the world. It's just nothing compared to what it once was. So practically everything dies. None of the eminence lasts forever.
You're evaluating a company for potential investment. What do you place the most emphasis on, the business or the management? And do you differ with Warren when it comes to what you place first?
No, I don't. I think we're the same. I think we like the business great first. And then second, we want a great manager. But we have not made a huge success by investing in great managers who take over lousy businesses. That is not the way we rose.
And can a great business be run by a lousy manager? The inverse?
Sometimes. Coca-Cola was run for years by a man with very severe mental impairment. And the directors just assumed he was drunk and let him stay there year after year. Now, that's my idea of a wonderful business, that you can be mentally defective and run it pretty well. That was Coca-Cola in its heyday.
I really think Charlie had a great point where he said that companies are like species where they are on their way to dying. It's just a matter of how far can you delay the death of the company. This actually aligns with what Jeff Bezos said about Amazon, where he said that he thinks Amazon will eventually fail, but his job is to delay the fall as long as possible. Charlie's example of Kodak was a great one, where no one ever thought that any company would be able to replace Kodak in the photo industry. But unfortunately, Kodak was late in the digital world and was not able to follow the trend of the digital cameras and eventually went bankrupt. The case was very similar for Xerox as well, where no one ever thought at that time that Xerox could be replaced. I think he has a great point that even companies like Amazon, Google, Apple, and Meta will in the end eventually go bankrupt or fall, and new companies will rise as the trend changes, just as what happened to Kodak and Xerox. And therefore, recognizing a great company would be the key point, and that is what Charlie just shared, where he made it very clear that the most important aspect of a company when investing is making sure that the company has a great business going on and can thrive even if it has a horrible manager. And that's how good the business has to be in order to start a big investment. Now, I just wanted to make sure that although Charlie is an insanely great investor, he is not always correct. So please make sure you do your own due diligence before making any investment decisions. So with that, those were some key wisdoms that Charlie shared to the investors, and hope it was also helpful for your personal investments as well. Thank you very much for watching, and I hope to see you on my next videos.